Today, into darkness, the Bitcoin boom bust. Hello again, it's Martin North from Digital Finance Analytics Web, that is posts covering finance and problem news. Well, beyond the religious wars about Bitcoin replacing devalued fiat currencies, the truth is that recent market movements have wiped out all of its summer rally, giving back gains made during Wall Street's euphoric embrace, overt political support, and a surge in institutional buying. Profits are being taken, and retail investors left stranded. As the big boys play the markets, is conviction fading? Now, you might want to check out my recent live show recorded with Adam Stokes entitled What the F Just Happened in Crypto. But today, let's look at some of the recent dynamics. With the global cryptocurrency market cap now at $3.47 trillion, down another 1.81% in the last 24 hours, although of course it's still up 43.5% compared to a year ago. As of today, the market cap of Bitcoin is around $2.03 trillion, representing a Bitcoin dominance of about 58.52%, and meanwhile stablecoins market cap is at $312 billion, and it has an 8.98% share of the total crypto market cap. Bitcoin, the original cryptocurrency, fell as much as 7.4% to 96,794 on Tuesday in New York. That's the first time it's dropped below $100,000 since June. That's down more than 20% from a record high reached just a month ago, a plunge consistent with a bear market in equities. Ether slipped as much as 15%, and several so-called altcoins posted similar declines, bringing losses for many of the less easily traded and illiquid tokens to more than 50% this year. By the way, Bitcoin was last at $102,080 US. Back in October, when the first leg down hit, retail investors lost an estimated $17 billion in an attempt to gain Bitcoin exposure through digital asset treasury firms such as Metaplanet and Michael Saylor's strategy. That's according to a new research report. These losses came from an overpricing of share premiums that allowed those companies to sell stock at far above the value of their actual crypto holdings. Those share prices have now collapsed, leaving a multitude of individual investors holding the bag. The age of financial magic is ending for Bitcoin treasury companies, analysts at Singapore-based 10 Times Research wrote in a report titled After the Magic, How Bitcoin Treasury Firms Must Evolve Beyond NAV Illusions. Shares of the firm now trade just 1.4 times the value of its Bitcoin holdings, which is down from premiums that would triple or quadruple the value in the past. The strategy of most Bitcoin treasury firms was a fairly simple one: sell shares at a premium to the company's net asset value, use the spread to buy Bitcoin, rinse and repeat. From a $1 billion investment in Bitcoin, Metaplanet's market value soared to $8 billion before falling to $3.1 billion, while holding $3.3 billion in Bitcoin, the researchers noted. In the process, shareholders lost $4.9 billion in value, while the company managed to accumulate $2.3 billion worth of Bitcoin, a feat worthy of applause, they wrote. This compression between market value and share price is cause for concern. What followed was a brutal wave of liquidations, wiping out more billions in bullish positions. Since then, traders have stayed on the sidelines. Open interest in Bitcoin futures remains far below pre-crash levels, and even with funding costs turning favourable, few are willing to re-enter. As a result of all this, Bitcoin is up less than 10% over the year, lagging equities and once again falling short as a portfolio hedge. But in the latest falls, unlike last month's sell-off, it's not so much leverage breaking the market. If October's crash was about forced selling, the current drawdown may reflect something more sobering: conviction eroding. Long-term Bitcoin holders have offloaded around 400,000 Bitcoins over the past month, an exodus of about $45 billion that's left the market unbalanced. That's according to Marcus Thielen, head of 10 Times Research. Over 319 Bitcoin have been reactivated in the past month, mainly from coins held for 6 to 12 months, suggesting significant profit taking since mid-July, said Vertli Lude, head of research at K33. While some reactivation stems from internal transfers, much reflects real selling. Unlike the cascading wipeouts that triggered the October swoon, the current slide has been led by a steady drumbeat of selling in the spot market. That marks a shift from the pattern crypto traders have come to expect lately, when sudden bursts of volatility are typically driven by liquidations in futures markets. Roughly $2 billion worth in crypto positions were liquidated over the past 24 hours, according to CoinGlass, modest compared to the $19 billion in forced unwindings that punctured last month's crash. Open interest in Bitcoin futures remains subdued, though, and options traders have been placing downside bets, though putting contracts targeting in the range of 80,000 US. According to Theon, a growing imbalance between long-term holders unloading Bitcoin and new buyers stepping in is beginning to shape market direction and not just sentiment. Thielen observed that mega whales, entities holding between 1,000 and 10,000 Bitcoin, began offloading large volumes, even as institutional players try to absorb the supply. That helped explain Bitcoin's choppy sideways movements during the summer. But since October the 10th crash, Thielen says broader demand has faded. We broke through some on-chain indicators. People are underwater. They need to close their positions, he said. All told, accumulation by parties holding between 100 and 1,000 Bitcoin has dropped sharply. The whales are just not buying, he said. So looking ahead, Thielen warns the unwind could last well into next spring. In the 21-22 bear market, more than 1 million Bitcoin was sold by large holders over almost a year, a scale Thielen begins may repeat. If this is a similar pace, he said, we could see the situation going on for another 6 months or so. Bitcoin's decline to the June lows reflects a market structure still grappling with the psychological overhang from October's massive liquidation event, which has fundamentally altered how participants engage with the prevailing downtrend, said Chris Newhouse, director of research at Agonia, a firm specializing in decentralized finance. Call it a low conviction sell-off. Bitcoin's slide mirrors the reversal in high-flying tech stocks this week, with AI names like Palantir and Nvidia tumbling amid fresh doubts about stretched valuations and a certain well-known trader taking short positions on those two stocks. Bitcoin, often seen as a proxy for speculative momentum, is once again falling in step with equity sentiment. Actually, cryptocurrencies face several other headwinds, including outflows from exchange-traded funds and concern about potential selling by digital asset treasury firms, as I discussed above. Both spot Bitcoin and Ether ETFs have posted outflows over the past month, signaling cooling investor demand after a strong run-up earlier in the year. While it's still early in November, the trend so far is shaping up to be net negative, hinting at a pause in the sector's momentum, at least for now. So all up, the longer-term directional bias remains clearly bearish, though currently traders are not holding strong short positions with much conviction, so the market is dominated more by tactical short-term momentum, at least for now. And by the way, for reference, gold is also trading lower, with futures sitting at around 3,969 US, which suggests that markets are getting twitchy more broadly as political and geo-economic risks continue to bubble higher, along with the destabilizing quote-unquote investment in AI. As Peter Schiff said on X recently, the losses that will be suffered by Bitcoin hodlers and crypto investors will be staggering. More money will be lost in this bubble than was lost when the dot-com bubble popped. But if this signals an inversion to risk in general, look out for the even bigger AI bubble to burst. And that's the point, really. Crypto has become now part of the main markets, behaving somewhat in similar ways, with speculators looking for every opportunity to make a quick coin. The fundamental philosophical position of Bitcoin as an alternative to fiat seems to be being devalued in the process, although, of course, the religious wars will continue and believers will hold on, thinking there is a better future and a more valuable future ahead. But meantime, expect more volatility, more downside, and just more risk. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.